What's up, guys? This is Nasar El-Arabi, the Real Estate Doru. I'm not your guru, I'm your dude because I actually do this business. Today, we got my man, Dapper Dave, the mortgage consultant, and we're going to talk about how to buy your first investment property with a loan. However, before we get into that, please make sure you mash that like button, you comment, and subscribe to the Real Estate Doru YouTube channel. Now, let's get started. You're a mortgage consultant. And with you being a mortgage consultant, I want to give you a scenario. I'm an investor. I'm not a realtor. Um, I'm not a mortgage consultant. I don't do any loans or anything like that. However, I find properties, and majority of the time these properties are tore up from the floor up. They don't qualify for a loan. But sometimes, let's say I'm driving for dollars with the Deal Machine app, guys. So you can find that link in the description. But I'm driving for dollars and I find some deals. And sometimes the houses that I get, they're not that bad. It's just that the sellers have a situation whereas they can't do it. They can't list with a realtor because they need to sell very fast. Okay, so let's say I find this house that's worth $150,000, and the seller is willing to sell me this move-in ready house for $100,000. Okay, and I come to you. I say, hey, Dapper Dave, I want to use this property as a rental property. Can you tell me what does that look like? What's the process for that? And can you even do that?
Yeah, you can do that. It's going to depend on what the property has that as far as work that's needed. But if it's in livable condition and it will qualify for a mortgage through and actually appraise out, then you should have no issues getting a loan as long as you can provide the right documentation. And to qualify, I mean, it starts with just a conversation, a 15-minute conversation with a mortgage consultant. You talk about the three things that matter. I call it CIA, credit, income, and assets. The last piece is the property, but the property doesn't matter if you can't personally qualify for a loan. So as an investor, depending on your situation, you may have a job, that's W-2 in addition to investing. We don't necessarily need to look at your tax returns in that case. If you have rental properties and you want to include the rent on your income, then we're probably going to need to look at your tax returns. But there's also other programs out there that don't require tax returns at all. In fact, I've done several of these investor cash flow deals where if you qualify and the house qualifies, then we can actually just not even look at your income at all. We just look at the cash flow of the property. As long as that can cover the mortgage payment, then you're in good standing and we can get that deal done pretty quickly.
Okay, so that cash flow loan,
Mm-hmm.
and you don't have to look at, what did you say you don't have to look at?
You don't have to look at your income.
You don't have to look at my income.
No.
Okay, so you don't have to look at my income. Does my credit score play a factor in that?
Absolutely. Credit is always going to play a factor.
Okay.
Any kind of loan you get that is going to come from a bank, a credit score is going to be a factor. You can go down as low as, I believe it's a 680 on those deals where we're not looking at your income. But obviously, when you have worse credit, your interest rate's going to be impacted. A lot of investors, I hear that investor-friendly word thrown around, right? Like, I want an investor-friendly, attorney. Well, what does that really mean? They're really looking for a deal, right? Investors need to make sure that when they buy a home and they've got a mortgage in place, that it's going to impact their bottom dollar as little as possible, right? That's what you want as an investor, right? So, you need to take that into consideration then. Maybe you need to fix or work on your credit a little bit before. That doesn't mean don't go talk to your mortgage consultant. The best thing to do is have a conversation with somebody like myself so that we can look at your credit and tell you, hey, if you do X, Y, and Z, your score might jump 40, 50 points. We can do that. We can actually look at your credit report and tell you that your score could come up by doing 1, 2, or 3.
I come to you and you find the right product for me after talking and looking at my situation.
Sure.
You give me the right product. How long will it take to close? And what's required? What do I have to pay for up front?
Well, you don't pay anything up front, not with my bank anyway.
Okay.
The biggest thing that we hear people pay for up front is an appraisal.
All right.
We'll get your credit card information to collect for an appraisal in case you don't close.
Yeah.
That way you're not running away from paying a third party because work was done. When an appraiser's done, with his job, he did a job on that home, right? He's
Yeah.
got to get paid for that. And so even if the deal doesn't close, you still have to make sure he gets paid. But that's the only thing that you pay for up front when you get a loan. The other things might be like third party things like a home inspection. If you're paying for that,
Okay.
that's between you and the home inspector. It's not required to get a home or to get a loan. The process takes about 30 days for a traditional mortgage.
Yeah.
You know, if it can take longer depending on the situation.
Right.
Maybe you've got a funky income situation and we really do have to dive deep in your tax returns. That might take a little longer. You know, maybe you have a different situation. Like I've got one gentleman right now that's going through a loan. He is a wholesaler and he's constantly buying homes and selling them. And, you know, he wholesales deals all the time. But sometimes he'll actually buy them on his own portfolio.
Yeah.
You know, he's got that note on his name. And so it's taking us a little longer because he's constantly moving. So, but we planned for that. You know, he from the very start, he set the closing date out pretty far.
Okay.
Knowing that this was going to be a longer game.
Okay. Now, you said there's no money required up front. So those people that's hopping in, messaging me on LinkedIn and Facebook saying I have to pay X up front, I should be very worried.
Yeah.
Okay.
Yeah.
All right.
You know, I have heard of some companies, I won't drop names, but like where they charge a fee up front. It's a commitment fee or whatnot. Or you know, and that's gray area, man. It's a real gray area. I'm not an attorney, so I can't speak to whether or not it's legal or not, but I personally wouldn't get a loan with somebody that said, I need your money up front.
All right, you heard from Dapper Dave, so be careful with that. All right, so what we got here, ideally for this program for investors, you're looking for 680, a 680 credit score. Mm-hmm. Also, from the 680 credit score, once you're finding the right product to put them in, they should budget 30 days to close, could go a little longer. Yes. So for my viewers, you know, what happens, people who have not done a deal, sometimes we have homeowners that they will give you the time you needed to close. All right? They'll give you the time you need to close. But if somebody needs to close in a week or two, then obviously this is not going to be the route. Right. You know, but sometimes, you know, I know plenty of people whereas they got 35, 45 days, 60-day closes, and they can utilize this route. Okay? And yeah, so that's how you do that. Now, okay, let me ask you this question. What's my down payment looking like? Is that going to vary, or is it like a set down payment for investors?
So investors on a conventional loan, the minimum down payment is actually 15%. Okay. A lot of people think it's 20, but it's actually 15.
I thought it was 20.
It's not. Yeah, conventional Fannie Mae, Freddie Mac, they require a minimum of 15% for investments. However, pricing or your rate is going to be deeply impacted by how much money you put down. The sweet spot for an investor is 25%. If you have 25% to put down and you qualify for a conventional loan, there's favorable terms on a conventional loan than there are on bank statement loans or investor cash flow deals. With, banks base their loans on what's called risk-based pricing. What that means is the higher risk you are to foreclose on their property, the more interest they're going to charge you up front. And so if you can mitigate that risk and bring a bigger down payment, it's less likely for you to walk away from that home if you've got 25% of equity tied up in that home. So that's, you're going to have more favorable interest rates and terms on a conventional loan. But if you don't qualify for that, or if you don't want to go through the hassle of getting a conventional loan, there are other products out there that do require less documentation and that have a little bit more creative financing, if you will.
Perfect. All right. So people that want to get in touch with you, how do they go about that?
So you can reach me through email, david@lendingpathmortgage.com, or you can look at my website, charlottemortgageconsultant.com. You can also follow me on Facebook. I love Facebook. I love connecting with people there. And you can reach me on my phone number as well, 704-625-2592.
All right. There you have it. You have my man Dapper Dave to give us a rundown on programs for investors. Now, if you can all go to Facebook, right? Type in Wholesaling with the Doru. I have a Facebook group Whereas you can ask me questions and I can answer it because, as most of you know, I don't do any coaching or mentoring. So if you have questions for me, please go into that Facebook group and ask those questions so everyone could benefit. Um, Also, please make sure you like, comment, and subscribe. Follow me on Instagram at Real Estate Doru. And as usual, I'm Nasar, the Real Estate Doru. I'm not your guru. I'm your guru because I actually do this.